Hello, everyone. Very good afternoon. Whoever is attending today's second live streaming session, I would love to wish you, I would love to wish each and every one of you a very happy and a Merry Christmas. How many of you are celebrating Christmas for today? Let me know in the comment box below. So, moving forward, today we will be focusing on course number four, right? How many of you are excited for today's course number four? Let me know in the comment section below. So, let me start the session by giving a quick introduction about myself. I am Harsh. I am a financial trader having 8 years of trading experience in the financial markets. I have been trading the forex markets, the commodity markets, as well as the US indices markets. I am a technical trader specializing in technical analysis, and I have been blessed to be trained and to be mentored by some of the brightest minds when it comes to the financial markets under the guidance of those who used to work as flow traders on the Chicago Mercantile Exchange in the United States of America. I have been able to gain invaluable knowledge and experience when it comes to the financial markets. I have also been successful in handling $25 million dollars worth of portfolio. And on top of that, I have also been able to generate a consistent profitability between 30 to 35%. All right. So the reason I'm sharing all the information is so that you can be aware and be rest assured that when the information that is being provided from me to you is being provided by someone who has the knowledge, the experience, as well as the expertise when it comes to the financial markets. So, how many of you are excited for today's second live stream session where we will be covering into further and deeper details of trading logic? How many of you are excited? Let me know in the chat box below. So moving forward, we would be focusing on trading logic. Since the last couple of days, especially based on the last couple of days of the third live stream session, where we provide you with value in terms of education content, we have been stressing a lot on trading logic. How many of you have attended all the previous live stream sessions where we have been talking about trading logic? If you have, do let me know in the comment box below. All right. All right. So let us start with just give me a minute so that everyone, I want to make sure every one of you are onboarded and are willing to learn for today's fourth live streaming session. All right, so let's start with our course. I hope everyone has joined the live stream session. For those of you who are coming in late, please make sure that you have been arriving on time so that we can start with the content of our live streaming session. All right. Now, in the previous live streaming session, in total, we had discussed eight concepts, right? Eight principles that we had talked about, with the first four concepts already being discussed in detail in the previous live streaming sessions. And today morning, we had covered on the other important four principles that are responsible, right? So we had covered the four concepts pertaining to trading logic in our today's first live streaming session. How many of you have attended today's first live streaming session where we were covering up the topics mentioned? If yes, let me know in the comment box below. All right. So we had basically covered these four important concepts or principles, right, when it comes to trading logic, which was embracing volatility, recognizing market cycles, prioritizing probability, and understanding reversal patterns. How many of you have been in the previous live streaming session where I had discussed all the points in great detail? If you have attended, let me know in the comment section below. All right. So moving forward, let's start giving you a quick recap of the 4 points as well, right? So you always have to make sure that volatility is always going to be present. There is never going to be a dull phase in the markets that can be for prolonged duration of times. All right. I hope everyone understands. When it comes to volatility, the markets are based on volatility. We had talked about the factors which were responsible for prices to create volatility, right? We had talked about supply and demand and how supply demand is influenced by people's behavior. So, in general, the overall market runs on volatility based on human fluctuation, right? Human emotions of fear, greed, resulting in concepts called as supply and demand, which ultimately boils down to fluctuations in price. How many of you are understanding? If yes, let me know about it. All right. So I hope everyone has understood with the first point. Remember, it is just a quick recap of what we had already discussed in the previous sessions. For those who are attending or who are new to our live stream sessions, you do not have to worry because, like I said to all my viewers and my clients, when Harsh is here, there is nothing to fear. So we will be just covering up the basic brief introduction or brief description of all the points that had been discussed because it's very crucial to understand these concepts or principles. How many of you agree with me? If yes, let me know in the chat box below. All right. Now, moving to the next point, which is you have to understand when we're talking about recognizing market cycles, right? Market cycles are nothing but movement of stocks which have varying, inclinations or declinations. So keep it simple. We have been considering the concept of flowers, right? Flowers bloom in every season. So every flower does not bloom or doom at the same time, correct? Different flowers, some flowers bloom in spring, some flowers bloom in autumn or in winter. So not all the flowers in the world are blooming or declining at the same time, correct? I hope you're getting the understanding. Similarly to the concept of flowers blooming in different seasons, it boils down the same concept is applicable to stocks. So there are thousands of stocks and all the stocks are fluctuating annually. That does not necessarily mean that the stocks are rising or falling together. Very crucial point. People have the tendency that just because the sector is going up or the index is going up, so all the stocks should be going up, right? If the economy is doing well, people expect that all the stocks of that particular economy should be doing well as should be doing well. That is not the case because based on cycles, right? The term used is market cycles. You have to be aware that different stocks have different seasonalities or different market cycles. There might be some stocks that have been appreciating in value but have started to decline. On the other side, we might have some stocks that are declining and have started to appreciate in value. So there are many points that you have to be aware of this, correct? I hope people are understanding. If yes, let me know in the comment box below. How many of you are understanding? Let me know in the chat box, all right? It is very crucial for me to be aware that everyone is attentive and everyone is paying attention, all right? So, like we had discussed with thousands of stocks, some stocks are being bullish, some stocks are being bearish, some stocks are having neutral sentiment. But we, as small to medium term retailers, can utilize the power of flexibility, correct? Using the power of flexibility, we can identify which stocks are being offered at a discount, and using the power of flexibility, we can ride and take trades to make profit, correct? Are you understanding? If yes, let me know in the chat box below, all right? So one second. So you have to be understanding that under the same market conditions, some stocks surge while others, so the basic concept, it is just an understanding based on the flowers, like we had talked about, correct? When it comes to stocks having different market cycles, we want to use the power. Remember, stocks having different market cycles are basically termed as stock rotation, right? The terminologies are different, but the meaning remains the same. Market cycles, stocks having different characteristics based on their unique market cycle comprises of stock rotation, correct? So we have to utilize the power of market cycles, and that can, help us in looking for opportunities for our wealth to grow. Correct. So how many of you are understanding about market cycles? Do let me know in the comment box below. All right. Now we will be talking about the third point. Sorry, that we had discussed, and that would be based on probability reigning supreme. Like, how many people understand this particular topic? What do you mean by probability? All right, so it is very important to be aware and that we do not have to be based on markets being or us being correct about the markets every single time. Even the best of the best investors or traders on planet Earth are not 100% right all the time. You have to understand, even geniuses or stock market wizards like Mr. Warren Buffett, who is generally right only 60 to 70% of the time, and is still, capable of amassing so much of wealth. So if he can do it with a probability achievement just between 60 to 70%, you can be very well assured that even you can be attaining something similar. So for those who come with the mindset that they have to be right in every trade they take, that is not the right method when it comes to achieving financial success in the markets. How many of you are agreeing with me on this particular point? Let me know in the chat box below. Correct. So for financial freedom, you have to understand that it is compound growth that is essential, right? People think that just taking individual trades and making money is going to make them huge profits in the market. Not at all. It boils down to the compound effect, right? Compound growth of the portfolio, right? Based on the number of trades running. So that, and this is how, using the analogy of compound growth and probability, we can start to, increase our certainty and reduce our uncertainty. It could be various factors in the markets. It could be the rotation, the sector rotation of that particular stock. It could be governmental policies for easing a particular sector. It could be technicals based on supply, demand, price action. Any factors that can add value or provide you with more confluence in terms of a particular stock to increase, or having the possibility of increasing in the near future using the power of probability. That is the only way that one can achieve financial success, all right, in the market. If you are agreeing with me, let me know in the chat box below, all right. So the most uncertain thing for us in the markets is predicting the future. How many of us who are in the financial markets love to predict the future? If you do, let me know in the comment box below. All right, so people are saying yes, we are, we love to predict the markets. You have to understand that there is a difference between predicting the markets and speculating the markets, correct? How many of you understand? Sorry, it's getting cold, so that's why. So how many of you understand the difference between predicting the markets and speculating the markets? Every one of us wants to predict the markets because we assume that we know what is going to happen in the future. How many of you agree with me If yes, let me know in the chat box below. All of us love to predict the future, correct? But that is the wrong thing, right? The most uncertain thing is predicting the future. How many of you are agreeing with me? Correct? Many people think that just because they are predicting the future, they know what will happen. But what happens if your prediction is wrong? Have the people who are trading in the financial markets, have you anytime encountered a situation where you did start to predict about something and that you were very confident about, but it went in the wrong direction and you lost money? If yes, let me know in the chat box as well, right? So you have to be aware the most uncertain thing is predicting the future, correct? Pursuing perfection is meaningless and can lead to failure. For those of you, how many of you are perfectionists in your own fields? If yes, let me know in the comment box below. Right, so people are saying that yes, we are perfectionists in our fields, but you have to understand when it comes to the field of financial markets, being perfect is not a good thing. All the more it will cause you to fail in the markets, right? Pursuing perfection is not the right or the right methodology when it comes to achieving success. It is about probability. It's not about perfection, it is about probability based on compounded growth. How many of you are agreeing with me on this particular point? If yes, let me know in the chat box below. All right. So moving forward, we will be looking at the correlationship between the individual stocks and the index, right? Now, how many people have been looking at their charts or looking at the stocks that they are holding, whichever stocks they have been holding, and they expect just because an index is rising or a sector is rising, that the individual stock also has to rise similarly? How many of you are having this dilemma, or how many of you have encountered this situation where just because you expect the index or the sector to rise, you expect the individual stock to rise as well? So as of now, that is not the case. Remember, in today's stock market conditions, the overall market has little correlation when compared to the individual stocks. All right, any an individual stock may not rise even when the overall market does. So that is where predicting the markets can take a backlash, right? You can have huge backlash based on this concept of predicting the future. Yes, the the Nifty is rising. The oil sector is rising. So all the oil sector related stocks should also rise. That is not at all a genuine objective to think about, right? Just because all the sectors are doing good doesn't mean that even the individual stock has to perform as well. There can be changes. It could be because of stock rotation, right? Like we had talked in terms about cycle. It could be because of macroeconomic factors for that particular stock, or the management of a particular stock might be having some kind of dilemma with their shareholders. So there are reasons that can subdue the main underlying factor of an index or a sector rising. I hope you're understanding the point. So please be aware, just because all the market conditions are showcasing bullish sentiment, that does not mean that all the other individual stocks have to be bullish as well, right? We had talked about market cycles, we had talked about probability, how we can capitalize and use the power of trading logic based from a technical aspect to our advantage, correct? How many of you are understanding? Let me know in the chat box below. All right, I hope you're understanding. Good. So it is always crucial to follow market trends. What is the individual stock doing? How is the overall sector performing? How is the overall index performing? Each and every segment has to be analyzed properly, but making sure to follow market trends, correct? So remember, when it comes to stock trading, stocks are just tools. Am I correct? If yes, let me know in the comment section below. So stocks are just tools. you should not be developing emotions for them. All of us, how many of you have stocks that are currently running in your portfolio on your accounts? If yes, let me know which stocks are running and whether you're making or losing. All right. So when it comes to so we're getting answers, and all right, good. When it comes to stocks, just because we have taken a trade on a particular stock does not necessarily mean that we develop emotions for it, right? How many people agree with me? Majority of us take a trade and are so adamant that yes, we have to make money on the trade. We need to predict the market and we need to confirm our prediction by making money. That is not the right approach. So whenever you're trading on stocks, you have to understand they are just a tools of making money or trading in the financial markets. Do not develop emotions for them. Avoid being overly focused on individual stocks and start to recognize price differences. Correct? How many of you understand what I'm saying? We had talked about price differences in great detail, how fluctuations in the markets are caused by price fluctuations, right? Price fluctuations or price differences, and what are the factors, whether it's the supply or demand or influence of human behaviors, right? Human behaviors, investor sentiment, correct? We call it as greed, fear. So all these have been discussed, but coming to the main point is that do not base your judgments on the valuation of a stock. What do I mean? Stocks are used for as tools for trading. Don't overly get attached to them. If you understand, let me know in the comment section below. What have you understood? And if you have understood well, let me know that in the comment box as well. All right. So moving forward, we will be looking at understanding reversal patterns. Remember, let me reiterate again, all these points have been discussed, but it is very important to have a recap of these points because moving forward, all the points that I have mentioned, right? Remember all the eight concepts and principles that have been we have been talking about are of crucial importance. Correct? How many of you are attentive? Right? I want to know how many of you are paying attention to this live stream session. If yes, I want to know how many are paying attention. Write your names and let me know if you are paying attention. So people are saying, yes, Arsh, we are paying attention. If you have any doubt, any queries, you can always let me know in the comment section. And if you want to take notes, always make sure to sit with a pen and paper so that any doubts, any rectifications, or any thoughts that are coming into your mind, you can write it down quickly, right? And you do not have to keep it in your brain. So when we're talking about understanding reversal patterns, you have to understand that all of us have the greediness or the tendency for prices to catch. We want to catch prices at the corners, whether it is a top or whether it is a bottom. We love to be exact. Correct? How many of you love to be precise or exact in general, right? Irrespective of the markets, I would definitely say many of you are going to be yes, especially for those who have an engineering background. I am very sure because numbers and engineering and preciseness in the engineering sector is very crucial. But when it comes to the financial markets, that is not the case at all. We do not have to be very precise in catching the tops or the bottoms. Everyone who is attending the live stream session at one point in their life, when they have been in front of the screens during the market hours trading their stocks, they have always wished or fantasized about how can I enter at the cheapest price possible and how I can exit at the highest price possible, right? Have you had such thoughts in the running in your mind? Let me know, right? So many people will definitely say yes, Harsh. Of course, we want to catch the best price possible. We want to buy at the best price possible. We want to sell at the best price possible. But you have to be aware the markets are based on probabilities. We ourselves are not aware what is going to happen in the markets tomorrow. So coming with that intention of being correct in terms of predicting the markets and trying to catch the tops and bottoms is a recipe for disaster. All right. I hope everyone is paying attention. So rather than focusing on perfection, whether catching the tops and the bottoms, we want to be closer to the tops and bottoms, right? Not at the precise entry points, but being closer to the corners so that we can, start to expect the movement. Remember, the prices when there are reversal patterns being formed on in the markets, it is a natural law. If prices have been appreciating for quite a while, you will be expecting a turnaround taking place. Vice versa, if the prices are correcting, right, are falling down, there will be a turnaround to the upside in the future. This is a natural law, whether it is in the financial markets or whether in any aspect of life, right? Just because a stock or a product is going up in direction does not necessarily mean that it's going to continue for life, correct? You're going to have market fluctuations. I hope people are paying attention to, right? Now, moving on to the next topic, which we'll be looking at is many of our clients who are attending the live stream session, as well as other people across the globe. When it comes to the financial markets, most of the clients are currently in despair due to losses in their accounts. How many of you are having a similar situation that you are, going through as of now? How many people have this current crisis that are you are currently having? Let me know in the chat box. All right. So how many people are saying yes? Yes, we are having, losses in the financial markets. It is completely fine. At least now you are being true to yourself. You are letting me know as well that yes, we are that you are having losses, and it is okay. First and foremost, it is important to accept that yes, you have been making mistakes in the market due to whatever reasons it could be. But secondly, letting yourself know that okay, I have made mistakes in the past, I have lost money in the past, but moving forward, I have to work on myself, I have to work on my trading logic, I have to work on my technicalities, I have to work on my fundamentals. How can I get better in trading? And this is exactly what Harsh from Dolphin Markets is providing you. So make sure to keep attending all our live streaming sessions and make sure to attend the entire session, right? I've seen many people, they come and they leave midway. All the information that I'm sharing is based for your benefit. All right. So clients who are currently in despair due to losses in their accounts, you all do not have to fear, because when Harsh is here, there is nothing to fear. Moving forward, you will see a reversal, right? In psychology, a reversal from losses to winners, as in how you keep attending the sessions, right? So your luck is going to be in your favor, and the direction of your trading account is also going to shift significantly, right? From you losing to you making money. How many of you would be wanting to make more profits and more money in the markets? If yes, let me know in the chat box below. All right. All right, so good. Now moving on to the next point, which is understanding emotions and trading, right? Now, how many people are able to, and it is a very crucial point, understanding emotions and trading stocks are interconnected. How many of you agree with this particular point? Because price differences are stemming or they originate from human emotions, and having the right mindset are crucial for successful trading. It is not about the advanced concepts or the advanced technicalities or advanced fundamental data or insider trading that can make you money in the financial market. It mostly boils down first and foremost to the emotions that you are facing, to the emotions that are being encountered in your brain, and having the right mindset, correct? Having the right set of emotions and having the right mindset are the most two crucial aspects when it comes to financial success. If you agree with me, let me know in the chat box. How many of you are saying that yes, Harsh, you are correct? These are very crucial points to follow. Let me know in the chat box below. All right. So I hope everyone has understood a very important. Remember, till now we have been talking only based on the last four trading concepts. There are eight concepts in overall, but four have been focused as of last live stream session. Now we have just recapped, and it's very crucial to understand all the points that I have mentioned. You might feel it is, very basic, or some people might call it lame, but that is not the case, right? It is very vital information. And with our competitors, with everyone around us who are just focused on taking trades and making money, if your basics are not clear, how can you advance, correct, in life? Even in life, it is the same thing. You're structured in terms of your basics have to be very strong, and you have to build upon those basics so that you can improve upon, right, and then get advanced. So rather than jumping onto technicalities, price action, strategies, indicators, first and foremost start with your mind, because you are the one who is initially taking the trade, correct? It is not your enemy, it is not your competitor, it is not anyone but you who is taking the trade on your accounts. And majority of us are already aware. The reports are approving evidence that most of the people are losing money in the markets. So there is something wrong within us that needs to be rectified, correct? And that is exactly what I have been talking since the last couple of live stream sessions, right? It is high time that people start to focus on their mindset in terms of understanding the emotions that they go through in the markets, and how they can decipher those emotions and how they can rectify their mindset in order to bring a change, right? Only if you are able to bring a change in the markets can you expect the markets to run in your favor and not against you. If you are understanding, let me know in the chat box below, right? All right, good. So moving forward, now we will be talking about the main focus for today, right? Everything that we have been talking is pertaining to trading logic, but we are diving into it deeper and deeper. I hope everyone understands. All right. So many people, now we are going to start with the main context, right? Many people are, able to distinguish between investments and speculations. How many of you are able to distinguish between investments and speculation? Let me know in the chat box. Correct? Whether you are investing, whether you are speculating, whether to buy now, sell later, or investing in terms of buying now and holding it for a long time, they are different methodologies or approaches when it comes to trading, correct? But if you think about it, the outlook or the mindset for required, or the underlying reason for trying to distinguish between speculation and investing is actually unnecessary. What is eventually the main crux, and that is buying and selling, correct? We had talked about price differences. How many of you are aware of this? If you are aware of this, let me know in the chat box below. All right. So we will be focusing on, trading discipline, right? We are going to be focusing on trading discipline, and specifically what to buy and how to, sorry, what to avoid buying and selling. So let us start with first understanding what trading discipline is. How many of you understand what trading discipline is? If you do, let me know in the comment box below. All right. So discipline, yes, we are getting answers. Okay. So discipline is nothing but having a straight and a routine that has been placed into our lives, correct? So there is a very important, or let me say, there is high importance that is given to trading discipline. It's not just about clicking the button, taking trades, and making money. If it was as simple as that, everyone around us would be millionaires or billionaires, correct? Do you agree with me? If yes, let me know in the box, in the chat box below. Very important to focus on trading discipline, right? Especially how to avoid, or what to look at in terms of stocks to avoid, whether it is buying or selling, correct? So first, let us start looking at some of the common pitfalls of traders or investors in the stock market. All of you are aware that you have been making mistakes in your trading journey, and that is resulting in you making losses, correct? So we are going to discuss certain points that are going to be important, that have to be avoided, correct? So let me start with the first point, and that is going to be rushing to buy. How many of you have had this similar instance or a scenario where you are buying? The markets are rallying up, right? The markets are shooting. It could be any reason. Maybe a huge stock investor bought the stock, or maybe there was an FII who's interested in buying the stock. So many a times we have come across scenarios where the prices have been appreciating, spiking in the direction, right? Spiking in volume and spiking in terms of price movement. And everyone is like, okay, the stock is going up. Let us buy, buy, buy. But people have to understand these are mistakes, correct? How many of you have done such a thing while in your while trading in your accounts? If yes, let me know. So we had talked about these pitfalls before also, but these are very important, factors that have to be rectified, right? Second was being too greedy when selling. We had informed about this, but let me repeat it again. When we expect a trade to run in our direction, how many of you want to make more and more profits for a single trade that has been placed? If you take a trade, for example, on XYZ stock and the prices are currently at 100, you bought at 100 and the prices have reached to 150. So technically, you are sitting at 150. But all of us, let me know how many of us would want that stock which is at 150 to go to 200, 250, 300, 350, right? The sky is the limit. Everyone wants to make massive amounts of money on single stocks, right? And that is completely wrong. So you have to be clear in terms of when to close a trade once it starts to run in your direction, correct? How many of you are understanding? If you're understanding, let me know in the comment box, right? Any doubts, any queries, any questions, you can always revert back to me, and I will try my best to return back with your questions, right? With the respective answers. Talking about point number three, which is delaying stops, right? What do you mean by delaying stops? Knowing when to cut losses, right? How many of you have had instances in the past where you have taken a particular trade, but that particular trade is going against, and you hope that the markets are going to revive and is going to turn in your direction? How many of you have had these instances? If yes, let me know in the comment box below. So people are saying yes, we have been having these kind of, everyone including me. Initially when I started trading in the initial days, I used to be making all the points that have been mentioned, all the common pitfalls that have been mentioned on your screen. I have been doing all of those, right? So that is how people are losing money. There is a reason while where even if the index is rising, why are people losing money in the markets, right? If the index is overall rising, shouldn't people be making money in the economy? That is the hypothetical understanding, correct, of the markets. But in reality, the structure is completely different, right? So very important to focus on the points that I'm mentioning, correct? So delaying stops, which is point number three, is not cutting your losses when required to. We had given you the example of people visiting a doctor when they are initially ill, right? Just when they've started to get ill. While there are some people who go to the doctor, who don't go to the doctor even if they have severe complications. So when they should have gone to the doctor, when the illness started, they do not go. They wait when the illness gets worse and more severe and complicated. That is the time they realize that, okay, now it is the time to go to the doctor. But unfortunately, then you are already too late. So the same analogy is applied to the financial markets. You need to know when to cut your losses, right? Remember, knowing when to cut losses is of prime importance. And fourth point is going to be about over diversifying. How many of you have made the mistake of over diversifying in the financial markets? If yes, let me know in the chat box below. So when it comes to over diversifying, I have been a victim myself, but I have understood over the long term that if we are, because all of us over here who are attending the live stream sessions are between or are within the range of small to medium term investors, or so called as retail investors, correct? So if you are on the retail investors, we should be on an average not diversifying more than five stocks, right? Our diversification should be lesser than five stocks, at the max five stocks. Anything above five stocks becomes complicated, right? I hope people are understanding. If you're understanding, let me know in the comment section below. All right. I hope people are understanding. If yes, let me know. All right. So now moving on to the next point, which is going to be how we can adjust. So the pitfalls that I had shown you previously of making mistakes, whether it is rushing to buy, being too greedy when selling, delaying stops, or not cutting losses at the right time, and over diversifying. Now these are the pitfalls. Now how we can rectify these pitfalls, and how we can adjust our behaviors by correcting the pitfalls mentioned, right? So instead of buying greedily, you should be buying calmly, correct? Buy only when you are ready to take a trade. You shouldn't be having any kind of force that is being put over you, right? There should be no kind of pressure that is being overlaid on you when taking a trade. How many of you agree with me? If yes, let me know in the chat box below, all right? So, second point, selling without greed. As we had mentioned about the pitfall, which is being too greedy when selling. Selling without greed basically means knowing when to close a trade, irrespective whether it goes more in your direction or reverses, correct? It is hard to digest, but it is very important. We want to be selling without greed. If we have taken a stock which is, for example, at 10 rupees, and the stock has appreciated, for example, to 15 rupees, so the price has already appreciated by 5 rupees per share, and that is significant. Now that we are expecting the prices to over appreciate from 15 to 20, or from 20 to 25, now you are being over ambitious, and over ambitious in the markets is not a good thing, right? It is not a good thing. So we should be selling without greed. Third is about cutting losses quickly. Based on the pitfall that I'd shown you, where we delay our stops or we delay to cut our losses on time, it is high time that people should understand that whenever you're having a loss and you are clear that the prices are going to go against you, rather than depending upon hope, it is better to cut off, right? It is better to cut off, and live for another day, rather than blowing up your accounts based on hope. How many of you are understanding? If yes, let me know in the chat box below, all right? So, moving on to the next point, and that is going to be based on focusing on fewer stocks. Unlike the pitfall which I had mentioned, over diversifying, right? Taking too many trades and having too many stocks on our portfolio, we need to focus on fewer stocks. The fewer the stocks, the higher the probability of prices to go in our favor. The more the number of stocks, there is going to be a lot of mismatch taking place, right? Some sectors can be overperforming, some sectors can be underperforming, some stocks can be overperforming, some stocks can be underperforming. It is going to create a lot of chaos and delusion, right, when it comes to the market. So focusing on fewer stocks would be the right methodology to have higher probability trades and have have the ability to make profits consistently. If you're able to understand, let me know in the chat box below, all right? Now, let me ask you, why is rushing a problem, right? We had talked about it in a small brief in the previous slides, but I want to ask you, why do you think rushing in the markets is a problem, right? If you know the answers, let me know. You do not have to read the screen, but just try to understand from your own perspective, why do you think that rushing in the financial markets is not a good option? Why it's a problem? Exactly, because when we are rushing, we are having the herd mentality where everyone is rushing, so we should be rushing too. Not at all. Like the example that I've given, if the market rises sharply, Chasing the rally often leads to buying at the peak, resulting in holding on to losses. How many of you have had similar situations by trading by yourself? Let me know. Let me know in the chat box below. So when people rush, when a particular stock value has been rising dramatically, everyone gets carried away with the emotions of greed. Yes, the market is running in our direction. It is flying in our direction, and people make the mistake of rushing. Correct? They rush, and whenever they rush into the market, they are always buying at prices which are much higher or expensive. Correct? When the prices are reached to an expensive price level, the tendency is for prices to correct or retrace. So why would we buy prices at expensive or higher prices? Let me know in the chat box. Do you think it makes sense? How do you think that you have been performing based on your own trading experience? Have you had a similar encounter where the price of a particular stock is rising apparently based on some news event or some fundamental factor or some technical factor, or maybe because of governmental interventions? How many of you have wanted to rush behind the trade only to see that the trade that you have taken is resulting in a loss? How many of you have had such encounters? If yes, let me know in the chat box below. All right. So you have to be aware that we need to be able to buy calmly, right? We will take fewer trades and we will reduce losses rather than rushing or looking at prices appreciating in value and expecting us to jump onto the bandwagon and make money is generally the opposite, right? If everyone who's rushing into the markets and taking trades and losing money, what is the point? Correct? If the majority of us are losing money in the markets, there is something that the minority is doing that is making money. Correct? So we have to start thinking from that perspective. All right. So if we buy calmly, we will take fewer trades and reduce losses. So you have to be very clear that you have to be your own judge. Your account is your responsibility. Correct? Now, whether people are telling to take trades, whether there are trade pundits or speculators or huge hedge fund analysts telling you to take a trade, you have to be smart enough in terms of analyzing, is the information that has been provided to me correct and genuine? Correct? So think about all these points, because all these points will help you become a much educated and consistently successful trader. If you agree with my point, let me know in the chat box below. All right. So people have been having this particular factor where a particular scenario where prices are rallying, they enter and they are like, yes, now the prices have rallied, they will rally even further. Only to their despair, the stock markets reverse and they are sitting onto losses. If you have encountered such scenarios, let me know in the chat box below. All right. So many people are responsible when not trading, but they neglect their account when they do. So people needs to be taking responsibility for their trade and for their accounts. It is very simple and easy to blame others because of him or her I was not able to make money, or because of him or her I have lost money in the markets, is not the right approach. Start to take accountability and start to improve your conditioning, whether it is based on trading logic or understanding, being true to yourself in terms of understanding what are the factors in terms of emotions that I go through when it comes to the financial markets. Why there has to be a reason why many people they enter the markets with a very different intention, right? But over the course of time their intention flips. So what they had initially expected or aspired to be is not at all the case when they are in the markets, right? So there is a big amount of difference that is taking place in terms of reality and perception. Correct? How many of you are understanding How many of you agree with me that there is a big difference between reality and perception, right? What we perceive and what occurs in reality are two different outcomes. If yes, if it has happened with you, let me know in the comment box as well. All right. So, moving forward, we will be looking at, so these are the mistakes that you have been making and how we could rectify those mistakes. So from now on, let me give you a recommendation. If you are willing to buy or consider buying a particular stock, you can consider to purchase that stock at a 10% discount from your cost price, right? This is a very important nugget or added information that I'm giving to you. So rather than rushing into buying a particular stock, let the prices be calm, be, in a calm and composed manner. Let the prices come to your discounted price of 10%, and you will see the differences for yourself. Rather than running behind trades and making money, we need to be calm and composed, and that is how you will be having a clear mind in terms of what you expect for the financial markets. So I want every one of you to have this particular concept, utilize this and put it into physical, um, put it into implementation, right? I want you all to, rather than running behind trades, rather than running behind stocks, take accountability, approach the markets from a different perspective by waiting for a discount, or adding trades based at a 10% discount from your desired price. How many of you will are willing to do this particular step on your trading accounts moving forward? If yes, always let me know in the chat box below, correct? So we have to be aware, do not rush behind trades. It is important to be patient and let the markets come to you rather than you running to the markets, correct? The terminology that is being used intensively across the globe is FOMO, correct? FOMO. What does FOMO stand for? Anyone who could let me know the full form of FOMO? Let me know in the chat box below. So FOMO stands for fear of missing out. Everyone has the fear of missing out. Everyone else is getting something, and if I'm not getting it, that induces anxiety, that induces desperation, and that is what is called as fear of missing out. So you should be not having the FOMO effect, right? We call it as the FOMO effect, and we should start being more calmer and let the prices approach our desired areas of entry level, rather than running behind the markets, rushing into trades only to be losing in the markets, correct? So how many of you are understanding this point? If you have understood, let me know in the comment box below. All right, you have to understand that whenever it comes to the markets, you have to be aware that no matter where you are sitting, which account you're having, what is the value of your account, it all boils down to the decisions that we are taking in the markets that are resulting in whether the markets are going to be profitable for us, or destructible in terms of making money, making profits, or losing profits, right? Losing money, it is always in our hands. So we have to take accountability, we have to take responsibility, and we have to start working on our craft, correct? So how many of you want to turn losses into gains? If you want to turn losses into gains, I want to know your answers in the comment box below, right? Let me know your answers. If you know the answers, let me know it quickly, correct? So how many of you want to turn losses to gains? If yes, let me know in the chat box below. Everyone is saying yes, Harsh. Of course, we want to convert and we want to flip our loss making accounts to profitability accounts, correct? So everyone needs to understand, whenever we are taking trades that have been placed in the past, it is being done by us. So whether we are considering anyone else to be the enemy, whether it is the big banks, the hedge fund managers, The financial institutions, whether foreign whether FII, DII, it is just a point of putting the blame on someone else. But the enemy is within us. We rectify our mindset, and if we are able to control our emotions, we will be doing much significantly better, correct? So the enemy is within us, and we have to work on rectifying the issues that are leading to losses in the markets, correct? No one is forcing you to take the trades on your own. It is your own intuition, your own analysis, your own interpretation, your own understanding of the markets that is making you to take trades, right? No one is telling you to take trades based on whatever reasons they're telling. You are taking trades in order to make money. Now, if you are making mistakes in the markets in terms of losing money, you have to be very clear about that, correct? This is very important and crucial for me to share, because it's very easy to blame others, but the moment you start taking accountability for yourself, the change will definitely take place, right? So for those of you who are saying that the markets are responsible, the institutions are responsible, you are completely wrong. If you're losing money in the markets, it is because of you and you only, correct? So the enemy is within us. How many of you are understanding, and how many of you agree with this particular quote? If yes, let me know in the chat box below. All right. So from now on, we are going to be making sure that we will be avoiding to rush into the markets. How many of you are willing to follow this particular step of action with me? We will be avoiding to rush. We would be working on our FOMO, correct? We would be working on our fear of missing out. Rather than running towards getting something, we need to be calm, relaxed, and we need to wait. We need to have patience. So how many of you are going to avoid rushing? Let me know in the comments section below. All right. Planning your trades is very essential. So first and foremost, you have to avoid rushing. Secondly, plan your trades, where you plan to enter, where you plan to exit, where you plan to do if something happens. Remember, you should always have plan A, plan B. The more number of plans, the more solid your foundation can be, because you would be crystal clear in terms of what are the expected anomalies to take place, whether a particular decision will be successful or unsuccessful is not in your hand. But if you prepare for the upcoming trades, whether if this happens, then I will do this, if that happens, I will do that. So if you're very clear with both the directions, you will definitely be successful when it comes to financial markets. So make sure, first and foremost, we had talked about avoiding rushing, and secondly, planning your trades, correct? I hope everyone is following, and how many of you are going to implement all the concepts that I've been sharing as of today? If yes, let me know in the comments section below. All right. And based on these two factors, you can look at the performance of your account, and if you think that you are doing quite well, then I think that is okay. But I'm sure majority of you who are attending my live stream sessions are not being profitable. Am I correct? Are not being profitable when it comes to the financial markets. So please be aware that we need to start focusing on these points as well. Trading is a marathon. Only through gradual change can we achieve significant transformation. How many of you agree on this particular point? If you do agree, let me know in the comment section. We expect trading to be a sprint, right? Many people who are into trading, how many of you are who are into trading are having the mindset of sprinting in the markets, and how many of you have the mindset of having a marathon? Remember, both are different scenarios. Sprinting will only lead to chaos and losses in the markets, right? When someone comes into the markets in terms of making money quickly, that is not going to be sustainable. You are eventually going to be losing money. So trading is a marathon. What do you mean by marathon? I hope everyone is aware. Rather, sprint is, for example, a 100-meter race, right, where people run at full speed. Marathon is a 30-kilometer race where people have to gradually pace so that they can complete the marathon in the desired duration. So, like similar to marathon, trading requires you to take small steps, right? We call it as baby steps, gradual changes, as in how you keep taking gradual, as you make gradual changes on a consistent basis, can you see significant transformations in your trading journey. I hope everyone is understanding. I hope everyone is understanding. If yes, let me know in the comment section below how many of you have understood this particular concept as well. All right. So let me just repeat the 3 points. Avoid rushing. Do not rush into trades. Plan your trades. Do not enter trades just based on an impulse or just because everyone is taking a trade in that particular stock. Do not follow the herd. Remember, you need to start taking accountability for your own actions and you need to start taking responsibility. So, plan your trades. Planning of your trades is very, very, very essential. And third but not the least, have the psychology or the mindset of trading as a marathon race and not as a sprint race. Gradual changes will lead to massive improvements in your financial journey. If you are agreeing with me, let me know in the comment section below. And now we will be talking about greed. How many of you have been greedy when it comes to the financial markets? If yes, let me know in the comment section below. All right. Sorry. How many of you are greedy? How many of you want to make profits in the markets? Everyone will be saying, yes, we want to make profits, but there are many who are saying we want to make lots of profits, only profits, 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 right? Now, that is when people start to become greedy, correct? Have you had this similar encounter during your trading journey where you have come across that you want to make much, much more in the markets? How many of you have had this scenario when you have been trading by yourselves? If yes, let me know. Correct. So greed can be in terms of wanting to keep making profits. Greed can also result by regretting of a particular stock that you had taken, which you had closed, but it is still rallying. How many of you had certain instances where whether the prices are going in your direction or whether the prices are going against your direction, everyone at some point of time will be always greedy about achieving more, whether it is in terms of making more profits in the markets or whether it is in terms of regretting even after they have made profits in the markets because the price for that particular stock has been appreciating in value. So where they had entered at 50 rupees, for example, where they had entered at 50 rupees and the prices have reached to 100, they have booked a 50 rupee profit per share by the prices being at 100. So when the prices still continue to 150 or maybe 200, the regret is also as impactful as being greedy in terms of generating profit because they come in with the understanding that if I would have held the trade, I would be making much more money. But that on a consistent basis is not a good option, right? So people who are being greedy in the market, that is not a good sign, correct? I hope everyone is understanding, correct? So many clients who are entering the markets, yes, eventually the objective is to make money. But when they want to make more and more and more gains, that is the time when the profits that they are already being making start to convert into losses. How many of you have had similar encounters in your own trading journey where because of greed for stocks which were making money have been reversed and you are losing money? Has it happened with you? Let me know if it has happened with you. Let me know in the comment section below. So this is a very important and crucial point, right? We might be underestimating the importance of these concepts, but these concepts are what truly differentiates the elite traders from the ones that do not know, the newbie or amateur traders, correct? How many of you wants to be elite traders in this live stream session? Let me know in the chat box below. All right. So when it comes to clients who want to make profits, profits are good, but over profits or only more and more profits can be detrimental to your trading account. I'm sure everyone has been saying yes, because I was greedy, I was losing money in the markets, and I have lost amount, I've lost money on trades that have been profitable. So I hope everyone understands there is a point, or there has to be a line drawn in terms of what you expect in the markets and what are those expectations being met. And as and how the time progresses, you can improvise and adjust the parameters. But if you are entering the markets with the aim of just making money by hook or by crook, that doesn't work as well, doesn't work at all, correct? So for people who are greedy, please be aware that that is not the right way to move forward into the markets, and that will be resulting only in losses as and how time goes by, correct? Greed also stems from regretting selling a stock that continues to rise. At the end, the market has only one purpose, and that is to fluctuate, correct? Based on price differences, based on volatility, based on supply demand, based on differences in investors' emotions and behaviors. So if you are coming with the greed of just making money, so how will you make more money? You have to hold on trades. Now, many people think just because they are holding on to trades that the markets will eventually rise in their desired direction, and that is not at all the case, right? The markets are not always trending or going in a single direction. As we had discussed even previously, not all markets are going to appreciate or depreciate together, right? Different stocks have different sector rotation, different market rotations. So every stock has its own unique characteristic. We should be eventually looking at probability, right? How we can combine the power of flexibility, being small to medium term investors, and how using the power of flexibility, how we can adjust and enter trades in different stocks which are based on their own respective market cycles. So if you can take trades consistently and book profits consistently rather than being over greedy and expecting one stock to go in a direction for twice or thrice the amount that you have invested, it doesn't work like that. And the general notion or the overall inclining, the incline, the overall underlying factor has always been people losing money. So make sure that you are not being greedy and that you're following the instructions that we have mentioned, correct? It is better and prefer exiting a profitability trade at cost rather than exiting a losing trade at a loss, right? How many people are able to understand this? It is better you close a profitable trade and make money rather than losing a trade and closing it at a loss. How many of you are understanding? If yes, let me know in the comment section below. So I hope everyone has got a good understanding, and very, very important, protection of your capital, right? Protecting your capital is the most crucial aspect, right? It all boils down to risk management. So I hope everyone has had a good understanding. Yes, it has been quite informative and quite expansive, right? A lot of information that has to be absorbed. So please make sure to go through the live streaming session, go through all the slides, go through the presentations, and see how well you have understood. And I will be coming back again for the third live streaming session, where I will be talking again a further in-depth analysis based on trading logic. So I hope everyone has gained invaluable information for today, for this particular session. And for those celebrating Christmas, I want to wish each and every one of you a Merry Christmas as well. So don't forget to attend the third live streaming session, where I'll be talking more in detail about trading logic. Until then, have a nice and a fabulous afternoon, and I'll see you later. Namaste and take care. Bye bye.